Hi everyone. So haven't made a long form video in a while. Wanted to make one today. It's gonna be a little bit of a different video compared to my previous videos. It's not scripted. I'm kind of just speaking freely. I'll be walking you guys through a recording of my screen. So I'll actually be pulling up different things, walking you through the business model to estimate or to show you my estimate of how I want to calculate or how I'm calculating the economics of Robotaxi. There's a few conclusions that I guess I'll just right off the bat, I'll just jump there and I'll get into the numbers and explain sort of my conclusions. But I want to just start off here. So, what are my four main conclusions just looking at this model? For one, the vehicle cost or slash sensor suite is largely irrelevant. So, this means when you look at the numbers, I'll explain this, but essentially, Waymo and other competitors to Tesla can actually succeed, even if their upfront costs for their robotaxis are actually higher. Their sensor costs are much higher than Tesla's. Tesla obviously has an advantage, given that they manufacture their own vehicles, that they're using vision only on cameras, which are very inexpensive. But as you'll see in the numbers themselves, like it's not a huge cost relative to the bigger picture. The bigger picture is number two. So human costs are actually the biggest cost source. So human cost on operation of robotaxi, this is the biggest key success factor for any company that wants to be profitable on robotaxi. And I'll show you exactly why when I get to the actual spreadsheet. Um, the third observation that I have here is that the overall market is pretty big. So in the US alone, and the next slide will show you the assumptions on that. But in the US alone for 2025, I'm estimating that the market is worth over $80 billion. This is in revenue. And this is before accounting for any future growth. And so the market's been growing at around 10% a year. So it's a very healthy growth rate. I think all sort of analysts are expecting it to continue growing in the future, especially if robotaxi comes in at a lower sort of cost per mile than what it currently exists in rideshare and taxi, potentially even competing with personal vehicle and public transportation. So I think there's a lot of opportunity. But even if these things don't happen, the current market alone is $80 billion. So that's pretty significant. If you add taxi there, taxi, this is not rideshare, this is just traditional taxi. That's today worth about $20 billion US. So the total opportunity for sort of for Tesla here, like today, I would say is about $100 billion. That's the total market opportunity. And then the last conclusion that I want to bring your attention to is cybercab. So in my model, I'll show you. I do the cost comparison from a Model Y and for a cybercab, and cybercab is less expensive to manufacture, and this helps. This helps bring the cost down versus Model Y. But kind of similar to the first point, the upfront cost of the vehicle, when you look at the big picture, is not going to make the difference between affordability. So even though Cybercab is more affordable because it's gonna be less expensive for Tesla to build with their unboxed manufacturing method, etc., it's smaller battery, all these things, and you'll see in the model how that sort of plays out. Really, the advantage that Cybercab will give Tesla is more about scale and speed to market. They're going to be able to build these things very quickly and scale very rapidly. So, and doing that, they'll be able to capture market share quickly and put a lot of pressure on competitors. So I think that's the big advantage of Cybercab. It's not so much that it's going to cost less to build, although it will. So that only helps. But um, essentially, this strategy that Tesla's you know partaking in for Cybercab really only works if there's the demand for the cybercab, and that's really dependent on whether or not the software works. So it always comes down to software performance. If FSD works well everywhere, Tesla will be able to scale cybercab very quickly, and they'll be able to flood the market very quickly, and that'll quickly change the dynamics of the market. But if FSD is kind of where it is today, sort of progressing in an iterative fashion, um, Tesla doesn't have a hard time doing a lot with Cybercab. So uh, that opens up other questions about is there a plan B if Cybercab is not being used exclusively for robotaxi? Do they sell it with a pedal and the steering wheel? Maybe, but we're not going to explore that in this video. We're really going to be focused more on the assumptions behind robotaxi and what the opportunity looks like, how all the numbers roll up, and um, and why this could potentially be a very lucrative business for Tesla, which I think all of you know. So just high level assumptions here. This was I forget if I used Grok for this or ChatGPT, but I just wanted the AI to provide like a high level assessment. Given what we know about Uber and Lyft, as to what the overall market looks like in 2025, or provide an estimate for the overall market. And what that looks like is 11 million daily trips in 2025. This is your rideshare trip, so not taxi, just rideshare. And then if you look at what that, if you calculate what that means per capita in the U.S., that's the second bullet here. It's 0.033 trips per person per day. So I use these numbers in my model later. I'll show you where, but I just want to show you sort of where that comes from. And again, it's using Lyft and Uber numbers to sort of calculate, triangulate this number. So it may not be perfect, but it's probably accurate enough to provide the bigger picture. So jumping into Tesla, I'll go through all the different assumptions and I'll sort of go all the way down. So how the spreadsheet is built, we have operations on the top, we have revenue estimates, cost estimates. You'll see most of the form, most of the spreadsheet here is cost estimates, right? And I'll go through all the different buckets and my assumptions here, and I'll show you sort of why I've reached the conclusions that I've reached. But I'll start at the top. So looking at operations, what are my assumptions? My assumptions are in these I guess it's yellow cells here. First assumption is the average mile per trip in the ride share is 10 miles. Average taxi uptime, and then uptime meaning time that the robotaxi is actually driving a passenger. So anytime they're not driving a passenger for charging or for driving to a passenger to pick up a passenger or for cleaning or for any other maintenance, this assumes that the robotaxi is up 12 hours a day, which I think is a pretty reasonable estimate. Um, so yeah, 12 hours a day. Another assumption here is that the average speed for a robotaxi, on average, again, there's going to be fluctuations here depending on whether or not there's highway trips, but on average, fleet wide, 25 miles per hour. So it's city driving for the most part. This is just a straight up formula. So if it's driving for 12 hours a day at 25 miles per hour, it's driving around 300 miles per day. Again, another formula here, zero point 0.4 hours per ride. So that's roughly, it's not, zero point 0.5 would be 30 minutes. So this is a little bit less than 30 minutes, which I think makes sense. And then if you look at, again, another formula, what's the number of rides per day per robotaxi? We have the number of hours operating divided by the number of the duration of each ride. And that's essentially 30 rides per day per robotaxi. So then I wanted to see, okay, well, how many robotaxis does Tesla need? And I just use Austin because obviously they're operating in Austin now. Um, how many robotaxis does Tesla need to satisfy Austin? So population of Austin is 1 million people. Again, we're using that number, that 0.33 number that we got from, or 0.033 from the other tab here. This is where this number comes in. This estimates that in a year in Austin, there's approximately 12 million rideshare rides. That's the 1 million times that 0.033 times two. These are rides per day. So multiply by 365 days, and we get our annual number here. So for Tesla to meet 100% of the market, this is the calculation here. Essentially, they would need to we would need to divide the number of rides per year by the number of rides per day divided by the number of days in the year. And that gives us a number of 1,100. So for 100% market share, if it's only Tesla Robotaxi, they would need 1,100 cars running in Austin continuously every day of the year. I'm assuming here that Tesla would only capture, let's say, 20% of the market. So for 20%, it's 20% of 1,100, that's 220. So the active fleet, and you'll see sort of where this number comes in. Of course, this number can change based on these assumptions, but I ultimately drill down to costs and revenue per vehicle. So it doesn't really matter what the fleet looks like. It does, however, matter when we talk about supervision, operations. So all of these things sort of come together at some point. But for the purposes of the exercise, let's assume it's 220 vehicles. And that's the operations. Moving on to revenue. Again, here we can debate how realistic is this. I feel like these numbers are actually maybe even higher than some other analysts have forecasted in terms of what Tesla could charge. And I put these numbers where they are just based on my experience of Uber and taxi, traditional taxi. I think even at this price, Tesla would be kind of on par, if not still competitive with Uber. So that's an upfront initial charge of $3, and then a charge per mile, a price per mile, which is a variable, depending on how often or how long the passenger is in the robotaxi. of $1.75. So if you look at what that looks like. So again, we estimated that there's 30 rides per day, so 30 times $3, that's $90, and that the average robotaxi will do 300 miles per day at 100 and sorry $1.75 per mile. So that's variable revenue of $525. So $615 if you add both of these together, which if you look at the revenue per mile, again, that's 615 divided by your 300 per day. So the revenue per mile is $2.05. That's the revenue number that's going to be feeding into our gross margin calculation below. And now the fun part, so costs. So as you can see, and I talked about it earlier, there's a lot of different elements of cost. I don't think I know. I spent most of my time trying to tease out all of the details on cost so we can get as accurate a picture as possible. Costs are ultimately what's going to drive this business, because the lower they can get the cost, the lower they can charge on price and still make money, and the more disruptive this whole business would become, right? So it's important that we try and get as accurate as possible on cost. And starting with the vehicle, so I have two. I have Model Y here, and I have Cybercab. So this is what it costs Tesla approximately to build a Model Y in the U.S. So $38,000. Tesla is aiming for a manufacturing cost of around $25,000 for Cybercab. Assuming they both have a 6-year depreciation, the annual cost is what you see here. So not a huge difference, right? Really not a huge difference. If you look at the daily cost are, that's basically the annual cost divided by 365 days. You can see on the daily basis, Cybercab, does cost $6 less per day, per Robotaxi. So lower, a good percentage amount lower. I mean, from on the percentage basis, um, we're looking at 35% cheaper. So that's pretty good, but overall dollar amount, not significant. Like and going back to what I said in my conclusion, number one, vehicle cost largely irrelevant. Let's just say for fun that Waymo is at $60,000 because they have to pay for Hyundai or whoever they're going to partner with. They have to add all their sensors and whatever. We're still looking at a very low number in the big picture. And I'll kind of bring you through all of the other costs. You'll see this. It's really not a big deal. Even if we go crazy here, we make this $120,000. Still, this is really not a big deal on a fleet-wide basis. But let's go back to what we had it. So we had $38,000 for the Model Y. Again, we see the difference there. And the next big bucket of cost we're looking at is charging. And so for charging, I have a variable component and I have a fixed component. Let's start with the variable component. Model Y has a 75 kilowatt hour battery. I'm assuming Cybercab, Tesla hasn't confirmed this, but I'm assuming Cybercab will be 45 kilowatt hour. And then Model Y gets, for that 75 kilowatt hour battery, 327 miles of range. I'm assuming Cybercab, again, Tesla has confirmed this, will get 250 miles. So efficiency perspective, I'm assuming Cybercab is more efficient. So in other words, mile divided by battery size, they're getting more miles per kilowatt hour. I think this makes sense. Cybercab is being built for this. There's less weight. Again, topic for me for another video, but that's the assumption in this model. Then the next thing that I assumed, again, this should be in yellow here, is that both of these batteries will always charge to 85%. And so what that means, straight up formula, 85% times total range. That's what we get. So 278 for Model Y, 213 for Cybercab. Charging sessions per day. So based on the battery size and how much what they're going to be getting up to in range, that's basically the 278 miles divided by the number of miles per day. So how many charging sessions on average do these vehicles need per day? Cybercab would need a little bit more based on this math than Model Y, but it's fairly close. Okay, the next one is cost per kilowatt hour. So I assumed here that it's 10 cents per kilowatt hour. And another advantage of of Cybercab is that Cybercab will be using wireless inductive charging. Compared to Model Y, which will actually require a physical person or a human being to plug in, the vehicle. Cybercab will essentially charge itself wirelessly just by driving over an inductive charging sort of pad on the ground. So this is a difference. This is one reason why it's less expensive for Cybercab versus Model Y on the charging front, is that there's just less employees required. So I'm assuming that for Model Y, five employees are required per charging location to charge Model Y. Whereas for Cybercab, it's just one employee just to make sure that everything's sort of working as intended. Um, the next assumption here is charging locations in Austin. So I've assumed that each location will be able to handle a capacity of 50 vehicles, or 50 vehicles will be assigned per location. They won't always all be there at the same time, of course, um, but a portion of them will be. And so again, I'm assuming four locations. It's the same number of vehicles in the fleet. And both assumptions assume the same number of vehicles. Um, but yeah, this is calculated essentially by total number of vehicles in the fleet divided by number of divided by 50 vehicles. So each model here would require four locations in Austin, and then we have the salary of the person. These people here, the people that are actually charging the vehicle or overseeing the charging of the vehicle. In the case of Cybercab, I'm assuming their salary is basically minimum wage, $35,000 per year. When you add that all up and you divide by the number of days, again, so this is $35,000 divided by 365 days per year, multiplied by number of employees by number of locations. Um, this is how we get the 39.59 essentially. So daily charging cost for a Model Y, 39.59, Cybercab 31.92. So again, looking at vehicle manufacturing cost and variable cost, cheaper to have the Cybercab, but not a huge difference. Okay, so the next section here is the the fixed charging costs that Tesla would need to, account for, both in the case of Model Y and Cybercab. Again, Model Y will be using superchargers. So we have the estimated cost per supercharger post at a given location. And for Cybercab, I've assumed that the inductive charging cost will be a little bit higher, just because Tesla's already, building superchargers for their supercharger network. So I think it's realistic, at least initial operations here in Robotaxi in Austin, since this is the first sort of major rollout, that it would make sense for Cybercab inductive charger to cost a little bit more. The next assumption here is that the number of posts or inductive chargers per charging location is 20. Don't forget that I mentioned that each of these locations are intended to handle 50 vehicles. And so this assumes that, roughly one out of two vehicles always have a post essentially to plug in. We've already talked about the number of charging locations in Austin. That's four. So when you look at total infrastructure cost, essentially we just multiply everything together. We get 3.5 million for Model Y, 4.4 million. Again, a little bit more for Cybercab. We depreciate this over 8 years, and this is the annual depreciation cost, right? Right. So we just do this divided by this, and then this is the daily depreciation cost divided by the number of vehicles in the fleet. So that's going to be allocated towards those 220 vehicles, and that's what it looks like. So again, not a huge difference between Cybercab and Model Y, but in this case, Cybercab is a little bit more than the Model Y. The next bucket is insurance. So I think I've assumed $6,000 per year for Model Y, $5,000 a year for Cybercab. Um, Cybercab will be a little bit cheaper for Tesla to manufacture, so I think it's just um, reasonable to assume that insurance costs will be a little bit lower. But again, not a huge difference. Next bucket is maintenance. Here, I've assumed that maintenance costs are essentially the same. I know that for Cybercab, Tesla's designed a robot that can do a lot of the cleaning autonomously, even. But I think it's not going to be a significant difference, or at least that's the assumption here. So, but I tried to look at all the different things. So, annual costs for, let's say, tires, brakes, filters, fluids, other, maintenance, repairs, etc. Maybe my tires number is a little bit too low. Um, Probably a lot too low. Actually, I'll just increase that right now. Let's just multiply that by three. There we go. So a little bit higher. I think this is probably more realistic for maintenance. But again, I'm using assumption that it's going to be comparable for both. Now, here's the big bucket. So this is going back to my conclusions, right? Human costs related to operation and supervision is the single biggest key success factor. So this is why. Oh, this is why. Right now, um, Tesla is operating the robotaxi network in Austin with a safety driver, and there's also remote sort of. There's also people that are working remotely to intervene in the event that there's a need for them to do so. So there's actually more than one person per vehicle in Tesla's robotaxi fleet in Austin right now. This I've assumed 1.2. So 1.2 means you have the safety driver plus you have one employee for five robotaxis, so you get the 0.2. Um, The next sets of numbers are essentially if we need 1.2 robotaxi operators per, sorry, remote operators or safety drivers per robotaxi, um, what does that look like in terms of the number of shifts that are needed given the number of vehicles in the fleet, right? So that's 1.2 times 220 vehicles. So you need essentially 264 hours of labor, uh, and divide that by three or multiply that by three. That's basically these are the number of 8-hour shifts that are required. Now you can't have one employee per one 8-hour shift because employees don't work 24 hours a day, 7 days a week, right? And people can get sick, etc. So there needs to be a little bit of excess capacity there. So I've assumed 1.2 employees, so it's essentially 20% additional capacity to manage the demand. And that gives us 950 remote operators. That's basically your number of shifts needed by number of employees per shift. We have 950. Assuming these people make $50,000 a year, so slightly more than minimum wage, I think they need to have a little bit more of a technical background than people that just plug in a car. Like we saw, I only assume $35,000 a year for these folks, but $50,000 a year, so a little bit more, but still very low in terms of salary. Annual salary $50,000 a year. That's a daily salary if you divide by 365 of $137. And then this is the cost of basically the daily cost of multiplying those 950 remote operators by the $137, and that's the $130,192 per year per day per year. And then we divide that number by the number of vehicles in the fleet, and then we're at $591. So as you can see, this number, much bigger than all these other numbers that we looked at previously, right? And I'll play around with it a little bit more to show you sort of how it changes. But before I do that, I want to sort of finish going through the different cost buckets. So the next one is roadside assistance. To support this business, there may need to be vehicles on the road that are available if ever there's a need for them to intervene. I don't know, a flat tire or some other issue when the safety op, the person in the vehicle, if there's still a person in the vehicle, can't necessarily assist, right? So I took a very sort of conservative number here. So I'm assuming that for every 25 robotaxis, there's one roadside vehicle. So it's a pretty good ratio. But in this case, Tesla would still need, let's say, 9 roadside vehicles in service. And that's your 220 divided by um, the number of vehicles per roadside vehicle. That's 25. So that's 9. So doing the same math that we did above, so that's 9 24-hour shifts. That's 26 8-hour shifts, 1.2 employees. You need 32 employees to manage just this business, just for Austin. Same set of assumptions here. $50,000 is the salary, daily salary. Uh, I'm also assuming that there's gonna be a manager, to manage this operation. I think it's a bit more complex than just plugging something in. So the manager has a salary of $100,000. Again, daily salary is a bit higher. The total daily cost of all of this essentially is the sum of these two divided by the number of vehicles. This is the cost per robotaxi. Again, not a huge number here, $20.97 per robotaxi per day. The last bucket is the engineering support. So here, salaries are a bit higher, right? These are software engineers working for Tesla. And these are engineers that are just dedicated to robotaxi. So right now, I think Tesla is sort of splitting a lot of these costs um, with the they're able to spread out these costs over their fleet essentially because they're selling FSD to many vehicles every quarter. And so when they're recognizing some of that revenue, they're able to recognize some of those costs. But I think there's going to be a dedicated cost center of just engineers dedicated just to robotaxi to optimize performance of a robotaxi in a given region, and ideally get the amount of supervision down. Like, that's going to be a huge ROI. So it's better for Tesla to spend whatever this is, 5 times 250,000, 1.2 million a year, which is not nothing, but to get this cost down, I think it's worth them doing that investment. So when you look at what this means from a summary, so this is just summary. Again, we have Model Y, we have Cybercab. Not a huge difference in terms of total costs. Again, this is daily cost per vehicle, which again here reproduced here. So total cost per vehicle per day. When you look at it from a miles perspective, this is basically the total cost per vehicle divided by the number of miles driven per day, which is 300, right? So where were we? Here. So this is the total cost per mile. When you look at what this means, so we had initially calculated, don't forget, revenue per mile, right? We had revenue per mile of $2.05. So if we look at all of these costs, and again, I think the costs are all pretty reasonable. Um, Tesla's negative in terms of profitability on a gross margin perspective here. And let's not forget, before we jump to gross margin, Elon said that he thinks that Tesla can be as low as 20 cents per mile on Robotaxi. So I brought you guys through all the numbers. 20 cents per mile, they're at $2 and change now. 20 cents per mile is a bit of a stretch. Um, let's see. So right now, again, at these costs, they're negative on gross margin. Let's assume best case scenario here. I think best case scenario. No more safety drivers, and let's assume that there's a remote operator that's responsible for 10 vehicles. So one remote operator managing 10 vehicles. This point 1.2 goes down to point 1. If this were to happen, again, all the numbers are updating now as a function of this. Now, you know, Tesla is very profitable. So the gross profit per mile increases to 70% for Model Y, 72% for Cybercab. But even here, cost per mile is still over 50 cents per mile. So even though the operation is profitable now, it's still very far from 20 cents. So this may be one of those cases where Elon's sort of setting a number that is unrealistic that he just wants to push towards. How else can they reach 20 cents per mile? I mean, if 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 one operator can handle more than 10 vehicles, that would bring this number down further. That would lower the cost. Um, if they need less remote roadside assistance potentially, if this can go to like I don't know 35, that would bring it down still still over 50 cents. Um, but it's going to be very difficult. Cybercab already we're assuming that Cybercab is at $25,000 per for manufacturing. We're assuming I think very reasonable numbers for like the cost of charging, etc., insurance, etc., maintenance. So it'll be tough, but maybe not impossible, but certainly not realistic. And I think 50, 60 cents is probably the lowest I would be comfortable forecasting and having confidence, any sort of confidence in the number. So overall, I think again, this shows you, and again, this shows you that the key here, the key bucket, is really the amount of remote operators or safety drivers that are in the vehicle or managing the vehicles. So this is really, as an investor for Tesla, and you're curious about how things are going with Robotaxi, like this is the main thing to focus on. It's not the size of the fleet. It's not how much it costs to build a vehicle. It's not charging. It's not anything else. It's essentially this. Like the car needs to be, the software needs to be excellent, such that there can be nobody in the vehicle, and the amount of supervision these vehicles need is very low. And if Tesla can do that, then it becomes an extremely profitable business for them. So the last tab I want to show you guys is the what the overall market looks like. I talked about it in my conclusion here, the $80 billion. I just want to show you what this means and how I kind of get to that. So this is the top 25 metropolitan areas. I think it makes sense to look at these markets at least up front, because Tesla, if they're going to optimize for anything, it's going to be these regions versus the whole country. So this essentially, the top 25 metro regions, I won't go through all the numbers, but it basically accounts for 70% of all uh, the rideshare um, the rideshare trips per year in the United States. And if Tesla only targets a 20% market share, their annual revenue at that $2.05 would be about $11 billion. $11 billion, and again, depending on their gross margin, it could be good, it could be not so great. But assuming if they're actually getting 20% of the market and they're expanding in all these regions, they wouldn't do this unless their cost structure is much better. So let's just say it's $11 billion at a healthy gross margin. The overall market here again, we talked about the $11 million per 11 million rides per day for my second assumptions tab here for the total market. So times 365 days. This is the number of essentially rides per year, and then this is the number of miles, and that's how we get the 82 billion dollars, right? It's by multiplying the number of miles by that $2.05. So for Tesla, the opportunity, total market opportunity, again, just rideshare is 82 billion. You add another 20 billion for the taxi market, you're looking at 100 billion, and this is just the United States. Um, right now, Uber and Lyft, I think the U.S. and North America, maybe it's more North America, but I think it's about 45% of their sort of their market. So you can comfortably multiply this by two, just to cover the rest of the world. And again, this doesn't account for any growth. It doesn't account for any disruption to any of the other forms of transportation, which is a very possible. It's a very big possibility. Um, and so it's a huge amount of sort of high margin revenue that Tesla can add as soon as they can actually make the software work. And so I think this is why Tesla's been so focused on this, because the opportunity is extremely big, um, very profitable, like I said, and this is only at 20% market share. So Tesla, I think, is positioned to go well beyond 20% market share if they're able to get their costs lower. And it's all going to come down to how good FSD is and how safe it is, and how quickly this happens. Um, we are seeing some competition in the market now. There's a lot of noise about Nvidia and other players that are, Waymo, of course, expanding, and Uber. So there's a lot of still competition, but I don't think Tesla's at a point yet where, it's kind of just my opinion, it's still not too late for them to sort of overwhelm all of this competition relatively quickly. If we keep seeing the big increases in performance in FSD that we saw from, let's say, V13 or V12 to V13 to V14. So we need to see another sort of big jump in overall performance very soon, I would say. Um, but the opportunity is definitely there. So I think I'll stop there. Hopefully I was able to sort of explain the different conclusions, and show you why I think these things are true. Hopefully this provides some insight for you and you enjoyed the video. Again, thank you so much for listening. If you like this, please subscribe. It really helps my channel. I'm still relatively new, as you guys know, on YouTube. Not so new on X. If you want to follow me on X, I'd appreciate that as well, at TSLAFANMTL. The next few videos probably won't be as sort of freestanding like this. I'll probably go back to more structured things, but we'll see. We'll see how you guys like this video. Let me know in the comments if you like this sort of format, or if you prefer more prepared, more of my traditional videos that I put together in the past. Appreciate you guys. Thanks so much. Have a good day.